Cameron, there was a time that they didn't have 401ks.
What?
Yeah. Or even IRAs,
What?
right? Somehow people got by. Now, I will
What?
say back then, oftentimes that there were pensions that would help. But now those pensions are dried up. The 401k is not a good answer. You really, to get the financial dreams that you are capable of accomplishing, you need to have some control of your assets. And when we put it in a government created plan, then we need to follow the government created rules.
Well said. The thought of control and that deferred taxes or just having taxes in those accounts that you haven't paid yet. When you have that burden or that tax liability that's hanging over you, they have control over you, right? And it doesn't have to be that way. Taxes are a when, not an if, right? It's not when you pay them or if you pay them, it's when. So your choice is to pay those now today. And I'll tell you what, guys, go through this exercise. Think about what it would look like or what it would feel like if you took the money that you had, paid the taxes, got the IRS completely out of your scenario, and you had all the money that was left over to yourself. What could you go do with it, and what would that feel like? The idea that I get is I feel like the government is a mobster, right? As long as they have those taxes that you owe them, as they've got
Mm-hmm.
some sort of control over you,
Mm-hmm.
they can pull the strings and manipulate you along the way. I personally don't like that feeling, so not gonna do it.
I agree.
Yeah.
Let me say one more piece for it. But when, give me an example when the tax impact is should be the sole reason while you're making a transaction.
Never.
No, taxes are a big impact. It's a big piece of the puzzle, but it's not the entire piece, right? We do need to take that into account. And I would say outside of the employer match, um, I can't think of advantage of having a government controlled plan outside of some of the tax advantages.
Mm-hmm.
And if taxes are a concern of yours, and be honest, they should. And if you don't want to lose that tax deduction, there's ways that you can do something, I would argue, that is even better. Like we had a couple podcasts ago, we had a cost segregation guy. What was his name?
Yona Weiss.
Yeah. Where there right now is ability for with the cost segregation, which in essence means you can accelerate a lot of the depreciation in the first year as opposed to spreading it out. But it's very possible that what this can happen is you can deduct about the equivalent of your down payment, which means your rental property, if you buy a rental property, you can deduct that. And so you're kind of getting the same thing. If you put that money in a 401k, you get that tax deduction, but then you're going to have to pay taxes at the highest rate, which is your marginal rate when you pull it out. Or you could still get that tax deduction and invest in real estate. And then when you do sell that, you are going to pay at the lowest rate, which is long-term capital gains rate. And in addition, if it's very possible that you just, when you sell that property, you roll it into another one and including the gains, and then you roll it into another one. Very possible you could continue to defer these gains. And then upon your death, you get what's called a step up in basis, which means when you pass that down to the next generation, their cost basis or their value is what it is today. So if they turn around and sell it the day after you pass, no taxes are paid. And again, what we really need to focus on is not just saving for this rainy day. What we challenge you to do is to be able to live the life you want now. And we don't need to wait till we're in our 60s to be able to quote unquote retire. What we challenge people to do is to find something that they're passionate about and start doing it now. Or maybe if they enjoy it, it's not going to feel as much work. But and one way to do that, or a great way to do that is start creating some passive income, right? Once you get your passive income being greater than your monthly expenses, that's true financial freedom. Then you work because you want to, not because you have to. Or maybe you volunteer, or you just do whatever in the heck you want to do. Okay. But what we're trying to teach people, let's not focus on, well, let's store this money, give up control till we're old. Let's get in control of our money. Let's put it to work in assets that are creating some cash flow, so you can accomplish the things that you want to do while the kids are still young and why you are still young.
You want to see the entire episode? Click here. If you want to learn how investors use infinite banking to increase their returns and lower their taxes, click here. If you want to see if infinite banking is for you and you have some questions, hop on a discovery call with us and one of our coaches. The link for that will be in the description.